change.
Okay, no major change for M&M Financial, but let's talk to another player now. HP Singh, Chairman and Managing Director at Satin Creditcare, joins us now to discuss this as well as their business outlook for the year going forward. Mr. Singh, thank you very much for joining us. This is Pavitra. So first up, on the RBI, tweaking these norms, can you tell us what is the kind of impact that you see on your own business and what part of your book is securitized?
So technically for us, I think it doesn't affect us much because we don't have shorter duration loans. Our loans are close to about 2 years or so. So 3 months, seasoning, which is there. Post that, I think we will, this will not practically impact us, because we don't have shorter term loans. And in terms of also the volume which we have, it's more of PTCs, term loans, and I think DA assignment, which is being done. Securitization as a product is fairly very less with us, so I think, this tweaking doesn't impact us.
Okay, it doesn't impact you. So that's another company telling us that these tweaking of these norms don't impact them. Mr. Singh, always good to see you. Tell us a little bit about how the loan growth is shaping up, because the MSME segment has done pretty well. If you look at it on a year-on-year basis, the growth has been good, although it's a lower base there. But for MFIs, not too much has happened, both quarter-on-quarter and year-on-year. There's not too much of a growth. What are you looking at for the full year, and what's the next year prognosis?
So for us, I think, this whole year is a consolidation year for us, along with some growth. What has happened is for the 2.5 years of the pandemic, there's been a lot of dent in terms of the portfolio quality, and so huge write-offs as well as provisioning has been done for this year. But I think, what we've been able to do, that the first 2 quarters has necessarily been where write-offs have happened, where provisioning has been to the extent for the restructured book. But that is all done now. Now for us, it is all looking back at the growth levels. Even in the last half year as such, for us, the disbursement has been to pre-COVID levels. But yes, a growth because of the write-offs and have not happened. But the next 2 quarters and the quarters moving ahead will typically have a lot of growth coming in, because the economic activity has picked up, the rural market has really picked up. So I think, we are all looking at now growth to happen in the microfinance space. And in the MSME space, definitely yes. There's been again a significant impact in terms of how the portfolio quality has shaped up. And after all the write-offs and provisioning done, MSME is also taking cue as microfinance to probably shape up in terms of growth.
Sir, I understand that this development, these RBI guidelines don't impact you because your securitization volumes are low, and in that particularly, you don't have exposure to the shorter duration loans. But just to understand from an industry point of view, what prompted this move by the RBI? Why is it that they're clamping down on securitization less than 365 days maturity? Because will this not increase the cost of funds for these companies at a time when the industry is facing tightening liquidity?
My sense is, I think, what RBI tries to look at is that the tenure of the loan probably should not be that short for you to know the real impact of the portfolio quality of what you're offering to the lender. That's the reason why maybe a 1-year tenure loan normally does not give you the right kind of behavior in terms of repayment capacities as such. That is why I think, RBI might have tweaked it that anything which is, close or lesser than 1 year probably doesn't go for the securitization, because there are other products, which are there, which can take care of that. So my sense is it's only for shorter durations where you're not able to really know the repayment behavior of the client as such, that these have been tweaked.
All right, got that. Coming back to your own business, if you can just take us through what is happening in the MFI book with the decline coming through once again. Do you think this is a trend that will continue going forward as well?
So I think, MFI as a sector, because of the last 2 years of the pent-up demand not being there, as well as, the portfolio quality and everybody consolidating themselves to look at portfolio quality in a larger aspect. My sense is the next couple of years or next few years, if I may say so, because of a huge demand coming up in terms of this thing, as well as I think the RBI tweaking norms for MFI, giving us interest, range-based pricing as such, the margin caps have been lifted. I think it augurs very well for the MFI industry as such. And looking forward, I think growth is something which will now definitely set in across the sector as such, including for ourselves.
So since things are picking up, are you looking to raise funds at any point in time?
Well, I think we are sufficiently capitalized right now, but in case if we require at any point of time to look at growth, and if we require capital at that point of time, I think, we will not shy away from taking capital at that point of time. But right now, I think, we have a healthy capital adequacy ratio of about 24%, which is, good enough for us, at least for the next, for the few quarters, where the growth takes place.
You're very optimistic about growth picking up. Any numbers for the second half of the year in terms of growth as well as FY24?
It's generally a band which we try to give it as about 15 to 20% year on year is something which is very feasible for everybody to grow at. But I think, for us, that is also the same band, 15 to 20 or 25% is what, we are looking at a year on year growth for us also.
So 25%, can we assume?
Well, I said the band, 20 to 25%,
20.
Okay, and what could the margin look like? If you can provide us with some direction on that. It has been around 11-12%.
I think margins will remain stable. In fact, I think, the margins have slightly, increased, have been positive in the last 2 quarters as such. So I think, the margins will remain stable, maybe with a slight increase in terms of the margins, which will be over there, The interest rate, the margins, the interest rate cap has been lifted since April. So that will actually give us maybe a slightly better positivity in terms of the margins also.
Okay, Mr. Singh, we leave it at that. Thanks a lot for joining in and giving us a quick update on the business. That is Satin Creditcare saying that the securitization norm changes don't really impact them.